Tesla reports earnings tomorrow, but the chart may have already revealed what's coming next. Right now, Tesla is sitting on one of the most important support levels of the entire year. If this level breaks, I think a move towards $360, $325, and possibly even the weekly 200 moving average becomes realistic. But if buyers step in here, there could still be one last rally before the next major move. Right now, the price of Tesla is at $378, and we're gonna start off here with the monthly chart. Right now, for the month of July, is looking very bearish. We have a gigantic red candle, and we're trying to hold the 21 moving average here as support at $376. If we lose this 21 moving average, it does look like we could end up falling down to this 50 moving average, which is currently at $285. Now, the RSI is still above the 50 line, but we are pointing down. We could break through this, and the stochastics RSI are pointing down as well. We still have a long time before we could fully reset here. Now, if we could hold on to this 21 moving average, I'm seeing a falling wedge here that already kind of broke out, and we're coming back down to test it. This measure move could give us a move to 515, but right now, if we lose this 21 moving average, we would have to negate this pattern, and we're possibly going to go down lower. Now, another pattern that I'm kind of seeing here, if we end up losing this 21 moving average, is that this could possibly be some type of a double top here, where you have one top and this is like a smaller top here, and then this measured move could take us down to about this 80 moving average, which is currently at $253. So these are possibilities right now for the Tesla stock longer term. We head over to the weekly time frame. Stochastics again are looking bad. We're rolling over. We're below the 50 here on the RSI, and I'm kind of seeing like this could possibly be some type of a head and shoulder pattern, where this is the left shoulder, this is the head, and then this is the right shoulder right here. We're pretty much on the neckline. The measure move to this will pretty much take us down to the 200 moving average, and that's also currently at around $282. Right now, we're below the 50 moving average on the weekly. In my book, to me, that means we're in a bear market for Tesla. We're also below the 21 moving average. The only thing we're holding here as support is the 80 moving average at 372. If we lose that, we have the 100 moving average at 360. Then we have the point of control here, this red line at 345, and if we lose that, then the next line of defense is the 200 moving average, and that's at $282. In order to negate this, we have to get back above this 21 moving average, and definitely back above this 50 moving average, which is at $408. On the 3-day chart, we can see that the stochastics still need more time to reset. We already lost all the major moving averages. You can see a smaller head and shoulder pattern here, left shoulder, head, right shoulder. This measure move does take you down to this 200 moving average. That's at $325. We can see here a gap in the VRVP. We already know if we see a gap like this, we could easily drop from this node all the way down to this node, and that's basically at 345. And then the 200 moving average is really right there. We have another little gap here. So if we cannot turn back up and get above this 21 moving average, the next logical move I think would be this 200 moving average at 325. Tomorrow we do have earnings. A lot of that is going to come into play. If we have bad earnings, I could see us get a severe drop down. Now, on the daily time frame, the RSI is starting to point up, but we're still below this 50 line. The stochastics are low, but we haven't been able to fully reset where we're starting to point up, and it looks like we are on the way up yet. We are below all the major moving averages as well. Maybe we do get a relief rally to this 21 moving average, which is at 395, but ultimately we have to get back above this 200 moving average at 416 to try to get bullish again. If not, more downside could happen. We're already on the cusp of this right shoulder breaking down. On the 4-hour time frame, we see that the stochastics are reset. We are pointing up. This could cause us a little relief rally to this 21 moving average at 392, but ultimately we need to get back above this 200 moving average at 395 and with strength and stay above it in order to get bullish again for Tesla. Ultimately, I would like to get above these wicks here, which is basically at $432. Anything below that, we still have a chance of continuing to roll over deep into the $300 level. Now, the 1-hour time frame here, it kind of looks like we're flagging out here sideways, but we're losing the 21 moving average, so this is bearish, and the stochastics here are toppy. We lost the 50 on the RSI. We're also rolling over. So if we cannot hold on to this 21 moving average, I do see more downside happening here for Tesla. And on the 15-minute time frame, stochastics are rolling over despite us being low, and we're below this 200 moving average. We need to get back above 389 to see if we could start working our way back up to $400. This is pretty much the gateway to higher prices. If we get rejected off of this 200 moving average, then I do see more downside. So right now, tomorrow is going to be a big catalyst to see see which way Tesla is going to be going. Are we going to go further down, or can we try to test $400 again? Right now, like I was telling you guys, if we lose this 80 moving average, I see us coming down to 360 on the 100 moving average. If we lose that, then I see us going down to the 200 moving average here on the 3-day chart, which is basically at 325. And if we lose this 325 level, we're probably going to end up falling down to the 200 moving average on the weekly, which is at $282. All right, guys, so that's the breakdown. If this gave you clarity or a setup to watch, do me a favor, like, drop a comment, subscribe. And if you have a stock or crypto you want me to go over, drop it in the comment section. This is Flex Candle, where we read the candles and flex the moves. Catch you on the next chart.